Well, good morning, folks. I'm going to do a quick update on natural gas because yesterday I did one, but it was part of a bigger video and it kind of got lost in there. So I thought I'd do a fresh one this morning, but I'm just going to repeat what was said yesterday, but that's okay. It'll just be an update. And actually today's looking a little bit better. Now, today is my wife's birthday. This is her first birthday as a married woman, so it's a special day. I'll be taking her out for dinner a little bit later on. Let's have a look at this chart. This is the natural gas day chart on NYMEX, the Henry Hub price. We're pushing up against that trend line and that pink resistance level. So that looks pretty good. You can see we didn't have any weird stuff going on over the weekend, no gaps, nothing, just a gentle move up. And what I said in the previous video, steady as she goes, is really the way it looks at the moment. Now, just above us, we've got the 20-period moving average, and we've got this little baby downward trend line. Really want to get up through there today. So we don't want to form a double top here. We want to push up through there and close above those two levels. So above 262 really today. And that's what we would hope for. And then perhaps a move up to about 270, this last swing high. That would be pretty positive for natural gas. Let's see what that looks like on the 4-hour chart. And now switching across to my broker's chart. This is real-time data. The Henry Hub data is 15 minutes delayed. So this is where we are. So the weekend rollover was the previous 4-hour candle, actually the one before that, just moving up slightly. And on the 4-hour chart, we're now going through the 50-period moving average. And above us, we've got the 200 at $2.64. If we could close up at the top here, like I said on the previous chart at 270, that would take us to the top of this green resistance level and above the 200 MA on the 4-hour chart. That would all look pretty positive. And if we could close there and hold there, and I don't think so, but perhaps even break above there today, above 268, 270, that would be fantastic. Don't think that's going to happen, but let's see. But as long as we don't form a double top going back to that previous chart at around about 262, and we can push up through there, it would be really positive for natural gas. There's not a lot of economic news in the first part of this week, anything that might vaguely affect natural gas, but a little bit later on in the week, on Thursday, we've got jobs, and then we've got inflation numbers coming out of the US. That will affect the US dollar, and in turn, that'll affect commodities, and natural gas invariably gets dragged along with the other commodities. So if the dollar drops, I think natural gas will go up. If the dollar strengthens dramatically, which I don't think is going to happen, then we should see natural gas pull back in a little bit. Remember, 10 to 12% of natural gas produced in the US is actually now exported, quite a lot of it to Japan. I was watching a documentary the other day, last night, World War II in color, and the fact that Japan bought most of its oil from the US, and the US put a sanction on Japan, was part of the reason why Japan got involved with Pearl Harbor in the Second World War and all that sort of thing. It was all, well, a lot of it was to do with oil. So Japan is a pretty important piece of this puzzle, and so is the Japanese yen against the US dollar. So keep that in mind. So having said all of that, where do we go from here? If we do manage to hold up above there and move up to these levels above us, and we've got 270 just around there, that green level, we'll go back to the day chart shortly, and we've got 275, and that level there is really the sort of barrier right now. How many times have we pushed up into that 275 to 280 region and fallen back down? On one occasion, getting up to the sort of 288 to 290 region. But this level here at about 275 has become more and more important. So we've tried once, twice, 3 times, 4 times, maybe 5 times to get through there and failed. Will we get through there on this attempt? This downward channel line can now be eradicated, removed. So let's get rid of this channel line. It's no longer of much consequence. And we're left with a broader channel line, this one going up on the 4-hour chart, just waiting for my charts to load. So there we go. And we're still heading towards that top level at $3 with that gap between 288, 290 and $3 needing to be filled. Still an empty gap, remember, it's still beckoning, still needs to be filled. All gaps love to be filled. And sometimes it can take days and weeks, and in this case, even months before a gap gets filled. This one goes back to March this year. We're now in August, so it's a long time, but we could get up to $3 sometime in the near future. We might have to get past August though and into September, October towards the fall season before we start to see more upward pressure on natural gas. But once we get up to $3, and if we can hold above there and around there and eventually break up through the upside of this channel, and we've got $3, 50, 60 or 75 that we're looking towards, and that will be the eventual and ultimate target for this medium to longer term sort of trade idea. And we'll have to wait and see what happens with that. We'll go back to the day chart and see the relevance of that area one more time. Just one more thing while we're on the 4-hour chart. If we continue to just follow this channel upwards and trade within this channel and not break above it, and get to $3 and edge above there, hold above $3, we may well just stay in this channel for quite a lot more time. That would take us into October, November, December. In that case, we'd be trading from the bottom up closing at the top, trading from the bottom up all the way up until we get into that $3.40, 50 or 60 region. So we may well just trade within this channel. So keep that in mind. It might be a long-term channel, longer term channel. We might have to keep on revisiting the bottom as that bottom sort of edges up as we creep up to that $3.40, 50, 60 or 75 level. Just going back to the day chart, I want to show you why that's an important level just to remind you. So there's the day chart, and actually it's really nice to zoom out and then compress the day chart to have a look at what the overall picture looks like. This green area is the 340, 50, 60, 75 region. You can see why it's an important level. It's been a supply and demand zone many times over the years. And when you look at it like this, you can also see that channel that I referred to on the 4-hour chart in a more simplistic view. And you can see that there's every possibility that we'll just carry on trading up in that channel. And if we get up into that zone over there, that would take us, and we can look on our charts, that would take us into December, and that would be perfect timing. That's winter, so all heaters switch on and the demand for natural gas begins to increase. So imagine that, just keep that in mind. We might just trade in this channel all the way towards the end of the year and eventually get up into that target zone. That's where the 200 period moving average is too. If you've enjoyed this content, please give the video a thumbs up. And if you want to see more, subscribe to the channel, and I'll see you in the next video.